Good morning. It is Thursday morning, February 19th. It's been a while since we did a video bringing traders up to date. Been waiting for some things to clear up, so we thought we would do this morning. And we're looking at an S&P 500 index chart. And just to recap what everybody already knows from previous updates, we go back here to the all-time high last year in May, and the Wilshire made its all-time high at this point right here. Then the Wilshire did a one wave down, a flat two-wave correction, 5 waves down at this point right here, made a lower low to make wave 3. Then it did an ABC 4, and then a 5-wave pattern down, a diagonal 5-wave pattern down to complete 5 waves at the minute degree for minor wave 1. And the Wilshire made its low here, even though the S&P didn't. So like we've been saying previously, we're aligning the S&P to match the Wilshire, and the global Dow also did this same pattern as the Wilshire, and we put more weight in those two indexes than we do the S&P 500. But that doesn't mean the S&P 500 won't end up being right. But for the time being, we will assume that the S&P just made failures at the points where the Wilshire made new highs and new lows. So if we look at the S&P, if this was a wave 1 down, this is really pretty ugly. As you can see, it's only 3 waves, a flat correction, a large decline. Basically, you just have 3 waves down in the S&P from here to here. That's corrective. This is a big 3 waves up. This is corrective. And now, from the high here, late last year, the market has done 5 waves down. This low here made a 2-point lower low than this low here. The futures didn't make a new low, so it was really kind of confusing. But there is a clear 5 waves down, a flat, 5 waves of wave 3. This is 1, 2, 3, 4, and again an ending diagonal for the 5th wave of wave 3, ABC 4, and the 5th wave down to possibly create minute wave 1 of minor wave 3. Now that's what the Wilshire and the global Dow indexes look like. So we're aligning the S&P to match those. We do have 5 waves down right here that qualifies for an impulse wave to make minute wave 1. However, the S&P is correct, and this would be A down, B, and C. This would be a big A wave, this would be a big B wave, and this would be 5 waves of wave C to complete a large flat that has lasted, by the way, about 8 months and 21 days, which 8 months Fibonacci, 21 days Fibonacci. So the big question here is this: on the long-term charts, is this a 4th wave? Is this a intermediate degree 4th wave correction? And now the market has started back to a new all-time high in wave 5. Or is the Wilshire and the global Dow indexes going to be correct, and we actually have 5 waves down here, 3 waves up, and 5 waves down to form minor wave 1, minor wave 2, and minute wave 1 of minor wave 3, which means that we're in minute wave 2 correction now. However, even in the Wilshire and the global Dow, these 2 5-wave patterns divided by the 3rd wave up can be a zigzag. It can be a 4th wave correction even in those. So trading short term, waiting for more confirmation to apply position trades. So far, the market has rallied up in a strong impulse wave. It's come back, as you can see, it's come back to the channel line that was broken. This line right here is created by connecting the tops here of 1 and 2, then parallel on that line here. market tagged that line here in the fourth wave correction, and now it's come back to it again. And we're counting this as sub-minuet or minuet wave A of minute wave 2, meaning when wave A is complete, we'll have wave B down, wave C up to complete wave 2. And then if this is what the market wants to do, if this is what it's going by, it'll start minute wave 3 down of minor wave 3, and that will be the largest decline we've experienced since the highs made last May and June. The market's also retraced 38% so far and hit the line. This, like we say, this is wave A. Wave B down and wave C up could reach back to the 61.8% retracement, which would be right around 2,000. Much higher than that, especially if the market was looking like it was doing impulse moves, we would really start to assume our alternate wave count was correct, and that the market has just finished a few weeks ago a large wave 4 correction. And you can also see a gap in the chart right here that could also be a target that could be filled before the market breaks down for good, not to see these prices again for quite some time. Let's look at a short-term chart. This is how the wave count breaks down so far in the rally. This morning's decline was 15 points. It matches this decline here exactly 15 points. So this could be, this is a fourth wave correction, held the trend line, so we expect another new high. And the new high will complete wave A. And then we'll look for a correction down. We have a large gap here. We have another gap here. And we have a gap down here. So these gaps will be filled. It's just a matter of when. So we'll do another video, bring everybody up to date as this pattern unfolds, and as we see a top of wave A, look for the wave B down. And we'll be back with another update as soon as we have more data.